Welcome to the Red Cloud Research Roundup, hosted by Red Cloud Financial Services. It is January 13th. Nevada-based exploration company Borealis Mining have released some exciting news over the past few months, producing high-grade gold results and a company acquisition. The Red Cloud Research team has been impressed, announcing coverage initiation on the story. Managing Director of Equities Research Stewart is here today to provide details on the news. Following up, BAPE Mining Analyst Taylor Combaluzier is touching on the new pre-feasibility study of Westlake Gold Mine's Madsen project in Western Ontario, as well as Denarius Metals' partial sale of Rio Nacera Recursos alongside its environmental impact study and approval of its Zancudo project in Colombia. Rounding out the episode, Alina Islam, Mining Analyst, is here to provide updates on the BAPE environmental report for Falco Resources. We have a lot to cover, so Ron, why don't you take it away?
All right, thank you. Good afternoon, everyone. I've got an initiation of Borealis Mining Company that I'd like to talk to you today about. Borealis is on the venture exchange, simple as BOGO. We initiated full coverage of it earlier this week with a $1.20 share price target. Stock is trading around 60 cents at the moment, and it has a market cap of about $50 million. The company was listed for trading on August 7th last year, having acquired 100% interest in the Borealis mine from Waterton in April of 23. The company reports its financial year end on July 31st. In their latest quarter, which was August 31st, they reported only about $400,000 in cash on their balance sheet. But Borealis has 16 million share purchase warrants issued at 50 cents apiece. So they're in the money, and we know that their shareholders are supportive, so we're not worried about the cash balance at the moment. We feel that there's a strong likelihood that some of these warrants are being exercised as we speak. On December 10, just a month ago, Borealis announced an agreement had been signed with Gold Bull Resources to acquire the company in a share deal. Borealis has offered 0.93 of a BOGO share for each Gold Bull share, which equated to a 71% premium over the VWAP on Gold Bull shares prior to the announcement. Ultimately, Borealis will issue about 13.8 million new shares to close this transaction, which we expect is going to happen at or around the early February 24. Borealis will ultimately have around 97 million shares outstanding and 124 on a fully diluted basis. That's with those warrants that I had mentioned a little earlier. So what does this combination really create? Borealis itself was started with a past producing heap leach mine located in southwest Nevada near the California border. This is a historic mine that had produced around 600,000 ounces of gold over its life with byproduct silver. In 2011, a previous operator named Gryphon Gold had permitted and built the current heap leach ADR processing facility, constructed line pads, haul roads, and had secured all the operating permits to restart the mine. They then ran into some financial trouble, which forced them to suspend operations. The project's been on care and maintenance ever since. So Borealis acquired this project fully permitted, fully built, and is ready to go as we speak. The current resource on the project is considered to be non-compliant. It was prepared back in 2011, although it had been used for a pre-feasibility study at that time. It's comprised of 500,000 ounces of oxide in measured and indicated mineralization, grading around 0.5 gram per ton. In addition, there's some underlying sulfide material in a resource that totals about 1.3 million ounces at around 1 gram per ton. Borealis is considered to be a high sulfidation gold system with numerous oxide zones at surface that transition into very high-grade sulfide resources at depth. The project has delivered some exceptionally good drill results, including things like 35 meters of 10 grams, 42 meters of 11 grams, 35 meters of 29 grams. So there are some really high-grade structures within this mineral system. We know of multiple zones and targets on surface that they can continue to explore and offer good opportunities for this company over the near term. The project itself is covered by a lot of recent sands and gravels, and most of the previous exploration was done where bedrock exposure had the gold systems right on surface. So looking under cover will be a major part of what Borealis is going to focus on. Meanwhile, the company intends on developing a mine plan on existing heap leach material to determine the near-term resumption possibility of producing. During this period, residual leaching of certain heaps that can continue, and in the latest quarter, the company actually produced 360 ounces of gold, generating about $1 million in revenue from residual leaching. We think this company can fast track this project to a restart, and will be looking to develop a conceptual mine model. Our model shows that we could produce 35,000 ounces a year over a 7.5-year mine life here, producing around 240,000 ounces of gold. All-in sustaining costs on our estimates would come in around $16.50 per ounce and would deliver about $135 million in after-tax cash flow. Startup capital is really low because, as I've said, this project is already built. Our estimate is about $34 million in startup capital. We think that this mine can start as early as 2027. Meanwhile, the Gold Bull acquisition adds another property called Sandman to their portfolio. Sandman is located in north-central Nevada near the mining town of Winnemucca. The Sandman property was the focus of a PEA done just last year in 2023. It has measured and indicated resources of about 433,000 ounces and another 36,000 ounces of inferred, grading around 0.7 grams per ton. Sandman, in contrast to Borealis, is a low sulfidation epithermal gold system with numerous prospects to further explore. The concept at Sandman is to develop a heap leach opportunity on the known resources and permit it for mining. Borealis will be able to leach the material there, put it onto loaded carbon, and truck that carbon back to their ADR facility at the Borealis mine. Permitting is the critical path at Sandman. So we've allowed 5 years for them to update the mine plan into a feasibility level and bring this into production once they've got their permits in place. In our model, Sandman would produce around 300,000 ounces over a 10-year mine life, again at all-in sustaining costs of between $1,500 and $1,600 an ounce, and the mine will deliver $214 million in after-cash tax flow. These two projects combined form the basis of our valuation model. From what we know today, we expect Borealis can develop a hub-and-spoke kind of operation that would produce over 600,000 ounces of gold at all-in sustaining costs of between $1,500 and $1,600 an ounce. Using our $2,400 long-term gold price, this mine generates an after-tax NPV at a 5% discount rate of about $234 million US. Our company net asset value on this includes upside for exploration potential and a modest amount of cash, together with being offset by corporate charges and financial charges over the project life, for a total net asset value of $280 million US. When we translate this into a per share basis, it's worth about $1.79 US per share today, or $2.50 Canadian per share today. We factor that value, that net asset value, down by 50% to arrive at our $1.20 target. We've met with management at Borealis a number of times to discuss their plans. The company is led by Kelly Malcolm, who has had a very good career working in exploration with Amex Exploration in Quebec. The board includes some seasoned and established mine builders, including Tony McCooch, who was involved with Detour and Kirkland Lake, Bob Buchan, who built Kinross, Greg Gibson, who is a key member of the Côté Gold, now I'm Gold team. It's also backed by Rob McEwen and Eric Sprott. So we have considerable faith in the pedigree of this team. Their stated strategy going forward is to develop a hub and spoke style mining operation to take advantage of a lot of the other opportunities that exist in Nevada. We'd be surprised to see them sit with these two assets alone. We would expect that they're going to make additional acquisitions as they move forward to unlock shareholder value. Over the course of the next few months, Borealis is going to close the Gold Bull acquisition, begin to drill with one drill at the Borealis property, and then initiate a drill program at Sandman. Follow up with a compliant resource updates, engineering, and metallurgical studies. Meanwhile, we could see some cash flow come out of Borealis through the residual leach. I'd like to remind everybody listening to this that there's a lot of technical risks to the mine plan that we have and the financial model we've created. The company, while it's permitted to proceed, the resources at Borealis are non-compliant, and there is more work that needs to be done. Our model is based on the pre-feasibility that came out on Borealis in 2011 and the PEA on Sandman in 2023. So while we have plenty more work to do and there still are risks, this team is well positioned and ready to go. I'd like anybody to give me a call to talk about this a little bit more if you'd like to learn a little bit more. But we actually think that Borealis is sitting in a very good spot given the strength in the gold market. And now I'd like to turn the call over to Taylor. He's got a few things to share with you. Thank you.
Thanks, Ron. This week I'm going to discuss West Red Lake Gold. We have a buy rating and $235 target price. West Red Lake is a Red Cloud banking client. So West Red Lake reported results of a PFS for its Madsen mine in Red Lake. The study outlined just over 7-year life of mine with average annual production of over 67,000 ounces per year over 6 years at an average operating cost of $919 US per ounce, an initial capital of $44 million. At a long-term gold price of $2,200 per ounce, the project generates an after-tax NPV 5% of $315 million, an IRR of 255%, and a payback of under 1 year. On top of this robust PFS, we believe there is still significant additional upside potential, including the identification of resources in under-tested areas that would be required to access distal portions of the current resource. This could reduce access development required per ton of ore and permit the use of lower-cost long-hole stoping rather than mechanized cut and fill. We also note that a conservative gold price was used for defining reserves. $1,680 per ounce was used, so a significant amount of indicated resources were excluded from reserves. An increase to the cutoff price to $1,900 per ounce would add about 2 years to the life of mine. Lastly, the PFS only considers 4 of the 7 deposits at Madsen. It does not include the Fork deposit, which is within 250 meters from existing infrastructure, and the recent Upper 8 discovery, which is a shallow high-grade zone. The Rowan deposit is also 80 kilometers away by road and could be a feed source with 312,000 ounces of gold. Production is currently slated for the second quarter of 2025. We believe the PFS is quite robust given the incorporation of a significant amount of new drilling, realized operating costs, and best mining practices. This should ensure that management does not face the same challenges as the prior owner of the project. While there was no update to the mineral resource, we do believe there remains potential for resource growth through the expansion of known zones and new discoveries. We maintain our buy rating and target price of $235 per share for West Red Lake. Next up, I will discuss Denarius Metals, which is a not rated stock. Denarius is a Red Cloud banking client. Denarius announced that it has received approval of its environmental impact study, or EIS, for its 100% owned Zancudo project from the local environmental authority in Colombia. With this approval, the company can now commence mining operations at Zancudo. First production is expected to be achieved by the end of the first quarter. The on-site 1,000 ton per day processing plant is also expected to be ready in the second quarter of this year. For processing in the interim, Denarius has agreed to sell the material mined to Soma Gold, which owns the El Limon mill located north of Aris Mining's Segovia operations. Both companies are now working together to restart the El Limon mill, which has been on care and maintenance since 2020. The processing of Zancudo's material at the El Limon mill is expected to begin by the end of February. Overall, we view this as a positive update for Denarius. Zancudo is expected to provide a near-term source of cash flow. Sticking with Denarius, the company also announced last week that it sold a 29% interest in Rio Narcia Recursos, or RNR, which owns a 5,000 ton per day processing plant and has rights to exploit the Agua Blanca nickel copper mine in Spain. The sale reduces Denarius's equity interest to 21%, but helps improve the company's liquidity by settling the remaining 14.5 million euros outstanding to R&R. While this is certainly not the ideal outcome, it is one that preserves liquidity given the delay in getting the water concession granted and thereby production restarted at Agua Blanca. That said, we are encouraged that Denarius has negotiated to maintain its role as operator at Agua Blanca and ensure its ability to process material from Lomero and Terrell, all while leaving the door open to potentially increasing its R&R stake in the future. Going forward, the water concession is expected to be granted in the next few months. Denarius is also continuing to secure financing to restart operations at the Agua Blanca project in 2025. And a PEA is also expected for the Lomero project in Spain in the first quarter of this year. Over to you, Alina.
Thanks, Taylor, and hello, everyone. Today, I wanted to talk about Falco Resources. We have a buy rating and 80-cent target price on the stock. This is FPC on the TSXV, and Falco is a banking client. So last week, as part of the permitting process for the Horn 5 project, the final report from the BAPE was made public. Now, some of you may be asking, who is the BAPE? They are an impartial commission that have been mandated by the government of Quebec to hear and understand the public's concern over mining projects. So the way the process works is that once the BAPE conducts its hearings, they issue a report, which is used by the Ministry of Environment, who in turn makes a recommendation to the Quebec government on whether the project should go ahead or not. So I think it is important to highlight that the ministry also conducts its own environmental analysis, but they also use the BAPE report to make the final recommendation to the government. Going back to Horn 5's report, this report includes opinions on various aspects of the project, which I won't go into details about because you can read this report, which is in French, on the Quebec government's website. But essentially, it concluded that the project, in its current state, does not meet the minimum requirements in terms of safety, public health, environmental protection, and cost internalization. So several issues were highlighted in this report, including issues on vibrations, induced seismicity, water, air, public health, and the social climate. And opinions were also provided on how to address them. Although the conclusion was unfavorable, management highlights that 90% of all the opinions that are directly related to the Horn 5 project have already been initiated or are planned to be completed. In fact, a third of the opinions in the report were actually addressed to the mining industry as a whole, which is confusing because it's addressed to everyone and no one at the same time. So while the market did view this news negatively, the stock is down almost 30% since this announcement came out. In our opinion, it is not a setback per se for two reasons. First, the BAPE is a third party or independent body that is tasked with understanding the public's concerns. And as I said before, the Ministry of Environment They conduct their own environmental analysis with their own sets of professionals and experts and arrive at their own conclusion. So the recommendations from the BAPE report could be integrated or not integrated based on what the ministry finds. Second, it is still possible that the ministry will greenlight the project even though the BAPE is against it. I'd like to provide the example of Champion Iron's Bloom Lake expansion project, which in 2021 received a similar report and conclusion from the BAPE. Now, I'll just note that this is not an apples to apples comparison, as it was a permit amendment, but essentially a year later, the Quebec government approved the expansion. So precedence in this case still shows that the Horn 5 project could go ahead. So we did speak to management after the report was out, and they plan to engage with all stakeholders in the coming weeks and determine a pathway to move the project forward. So overall, I'll just point out that the permitting for the Horn 5 project is moving ahead, and we should see a lot of progress on this front this year, given that the EIA and most of the documents were submitted back in 2019. But given historical timelines, we could essentially have a decision on this project by the end of the year at the earliest. And that's all I have. Thanks for tuning in with us, everyone.
Thanks for listening to the Red Cloud Research Roundup podcast, here to provide insightful news on the mining landscape. To access the research reports discussed, explore all of Red Cloud Securities' free research reports, and to subscribe to our email list, you can visit redcloudsecurities.com. That's all for now, and see you next Monday for a new episode of the Research Roundup.